Welcome to the South African Reserve Bank Monetary Policy Forum. Right. So this forum accompanies the publication of the Monetary Policy Review, which you received when you registered this evening. My name is Koketso Mano. I am an economist at the Reserve Bank. And I guess it's safe to say that the world of economics is always facing challenges, right? And this is the reason why we go across the country to talk about these challenges and explain exactly what the role of the South African Reserve Bank is. But more importantly, we want to engage you. We want to hear your comments and your questions and get an opportunity to respond to them. Okay, so before we get into tonight's engagement, kindly allow me to take you through the evacuation procedure. In the event of an evacuation, kindly move to the sides. The exits clearly marked on the sides of the auditorium. Outside, you will find ushers that will assist you. I ask that you remain calm in the event of an evacuation, as you will get enough assistance. All right, while I'm reading from my phone, can I just ask you to put your phones on silent to avoid disturbing tonight's procedures. Okay, so kindly put your cell phones on silent. Remaining with the cell phone, kindly tweet. Tonight's MPF is #Soweto MPF. All right, so kindly tweet throughout the procedures. And mind you, tonight is the 4th time that we visit Soweto. Our first engagement in Soweto was in the year 2017. Okay, so also, we've provided you with a feedback form on page 29 in this booklet. So kindly fill in page 29 of this booklet. Once you have done so, leave the feedback form on the registration tables outside upon your departure. We really value your feedback. It is exactly this feedback that allows us to improve our engagements with the public and also address any questions or concerns that you may have. Okay, are you guys ready for tonight's MPF? Yes, allow me to introduce the 10th governor of the South African Reserve Bank. And he is the chair of the IMF-FC. And that is the International Monetary and Financial Committee at the IMF. Allow me to introduce our distinguished leader, Governor Kganyago.
Thank you, Koki, and good evening. I've been introduced in order to introduce my colleagues. I have got on my right Dr. Rashad Kasim, who is the head of economic research and statistics in the Reserve Bank and a member of the MPC. And on my left is Kuben Naidu, who is the Deputy Governor of the South African Reserve Bank, also a member of the MPC. Importantly, is the Chief Executive Officer of the Prudential Authority, which deals with all the licensing of financial institutions regulated by the SARB. To his left is Fundi Chasivana, who is an advisor to the governors and also a member of the MPC, the Financial Stability Committee, and the Prudential Committee. And to her left is Dr. Chris Lowald, who is the head of research within the Economic Research and Statistics Department of the Reserve Bank, and also a member of the MPC and the Financial Stability Committee. It's always good to be back here in Soweto. What makes the Monetary Policy Forum in Soweto different is that we do not have to do long presentations like we do elsewhere, because we interact, and we have always found it useful, and it doesn't matter how many numbers there are. Do interact with us. The last time I checked, when we were here in Soweto, we had 65 questions. And so based on that previous record, and it had nothing to do with the number of people who were attending. So I'm looking forward to that interaction. Just thought that before we start, I would like to share with you just 2 slides. Just one, try to answer what is inflation and why we should worry about it? That first slide, I know this is the first slide. The one that comes after this one is the second slide, but it's the first slide that I am talking to. That inflation is basically a general increase in prices, and this, how is it measured? It is Statistics South Africa measures inflation using a basket of goods and services that an average consumer would actually purchase, and this is then called the Consumer Price Index, and it covers 412 individual items that different households actually consume. So, if we are dealing with 412 items, and they are all rising, their prices are rising, you can then imagine what happens to the consumer price index. And for that reason, our country had tasked an institution such as the Reserve Bank to keep inflation low and stable. But why should we have low and stable inflation? Low and stable inflation protects the purchasing power of South Africans. It reduces the uncertainty, helping firms and households plan for the future. And when we say to people we are protecting the value of the rand, people sometimes look and they say that, oh, the rand has gone up or down against the US dollar. That's not quite what we are protecting. The one we are protecting is the one in your pocket, and is whether it is able to buy roughly that basket of goods that we mentioned about, that it is able to purchase the same basket of goods in the future. So protecting the value of the currency permits us to pursue balanced and sustainable growth, but that does not necessarily guarantee it. So as it is understood, for us to have balanced and sustainable growth, we actually need to protect the value of the currency, and it is through that we would achieve balanced and sustainable growth. But you are going to need other things in addition to price stability or the protection of the currency in order to have balanced and sustainable growth. Put simply, it is a necessary condition for growth, but it is by no way a sufficient condition for growth. I would like to take you through something. If you flip to the next slide. Late last year, in 2018, I asked the staff of the bank. They went to some supermarket in the neighborhood. They checked a loaf of bread. It was some bakery that distributes to a number of supermarkets and stores. At that time, the loaf of bread was costing 12 rands and 95 cents. And we tried to look at what will happen to the price of bread if inflation was 15% per annum. Well, 15% per annum is not that far-fetched, because that was what inflation rate was. Average inflation rate was between 1983 and 1992. So if for some reason the South African Reserve Bank and the government decide to tolerate inflation of 15% per annum, that loaf of bread that cost you 12 rands 95 at the end of 2018 will cost you 212 rands by 2038, which is basically 20 years from then. It is a significant rise in the price of bread. But what would happen if that price of bread, or if inflation was to be allowed to be 8% per annum? So if the price of bread was 12 rands 95 in 2018, and inflation was 8% per annum, by 2038, you would be paying 60 rands per loaf for bread. Again, that 8% is not far-fetched. That is the average inflation between 1993 and 2002. Well, At the moment, the inflation target range is 3 to 6. And sometimes people think that maybe 6%, okay, it's 3 to 6, so if it's at 6%, it's okay. But if inflation is 6% per annum, which is the average between 2003 and 2016, that loaf of bread, which cost 12 rands 95 in 2018, will cost you 42 rands by 2038. The inflation target range is 3 to 6. The middle point of that range is 4.5. So if the Reserve Bank aims to anchor inflation at 4.5, the loaf of bread that cost us 12 rands 95 in 2018 will cost us 31 rands in 2038. Make your pick. Would you like to be buying a loaf of bread at 212 rands 10 years from now? Or would you like to pay 60 rands? Or would you like to pay 42 rands? 31 rands looks better, but is it necessarily good? Because that still means that the price of bread has at least doubled. That is the impact of inflation on an ordinary household. We know that bread is a basic foodstuff. Roughly every family would need bread every day. And so keeping inflation in check and thus containing prices of goods and services in the economy is good for an average household. I'm sure you would have preferred that in 2038 that you are still paying 12 rands 95 for a loaf of bread. Well, if you would still be paying 12 rands 95 by the loaf of bread, or a loaf of bread in 2038, meaning that inflation is 0, we might have no bread. Because the producers might just say it is not worth it doing these things. And that is why we put a range that has a lower bound that says is 3 to 6. And as it stands, many of the developed countries are struggling with inflation in some instances, if you are Japan, being not just 0, in some instances being negative. So if inflation was negative, and this bottle of water is costing 10 rands today, and you know inflation is negative, why would you want to buy the bottle today if I could wait and tomorrow I might buy it at 9 rands 90? And you come tomorrow and you say, well, if I wait a little bit longer, maybe it might be 9 rands. And the result is that producers might stop producing that particular commodity. That is the impact of inflation on ordinary households. So I thought that I would open up and share these things with you, and hand back to Kokeso and begin a conversation with you. And I think, Kokeso, let me hand over to you. Let me not say what you are going to do. You can say what you are going to do.
Thank you, Governor. Thank you so much. So how dare I not mention that we are live streaming on YouTube and Facebook. So if you want to check yourself out sometime, do check those pages. So to continue the conversation, Governor, there has been a lot of talk about changing the mandate of the South African Reserve Bank. How would you respond to this?
Well, the question is change it in which direction? And the conversation goes something like, you must care about growth, and you must care about jobs. But we do care about growth, and we do care about jobs. You can't beat an economy that is on its knees and hope that it would create jobs. Jobs are an outcome of growth. They come from growth. And so, when the authors of our Constitution tasked us with this responsibility, they were very cognizant that we will need balanced and sustainable growth. But they were also cognizant that that would not be possible if you have got price instability. There are countries that grow and might still be experiencing inflation. Lots of countries that are fast growing, actually have got a pretty low inflation. I am yet to find a country that has got high inflation and is also growing. Ask the Zimbabweans, ask the Venezuelans, and the bulk of Latin America is littered with that kind of history. And so I was just checking, and I saw a piece 2 weeks ago that said that in the past three monetary policy statements, the word growth and employment were mentioned 113 times. So when we sit there and we deliberate about what is the appropriate policy stance to take, we think of growth and what growth would actually be yielding to. And we talk about the stuff about employment because, as I had said, employment is an outcome of growth rather than the other way around.
Thank you, Governor. So the bank also manages the licensing of commercial banks and other banks. So Deputy Governor Naidu, are we allowing more black banks into the sector?
The short answer is yes, we are. There are several new banking license applications for different types of banks: commercial banks, mutual banks, cooperative banks, and cooperative financial institutions. Many of the applications are from black-owned people, black-owned parties. We've issued 2 commercial banking licenses in the last few years, one to Discovery Bank and one to Time Digital. Time Digital is now 90% owned by African Rainbow Capital, which is largely black-owned. On the mutual banking side, we've licensed a bank called Bank Zero. They've got a significant black ownership. We've also licensed several cooperative banks, and we're in the process of licensing 1 or 2 mutual banks that are black-owned. I should stress that black ownership is only one criteria that we should look at. In general, the big problem in South Africa is not necessarily black ownership of banks. It's that banks don't lend to small businesses. Banks don't lend to the township economy. The kind of services and products that they offer are often not affordable to the majority of South Africans. Right? So what you want is a bank that will lend to the township economy, a bank that will lend to small businesses, small and medium-sized businesses. You want a bank that will lower fees. Right? And all of those are part of the transformation objectives that we seek to achieve.
Thank you so much. So while we are on the domestic economy and how we need to grow sectors in this domestic economy, MPC member and head of research, Dr. Rashad Kasim, what would you say are the reasons why we have slow growth in the economy?
Thank you, Koketso. Thank you very much. It's a really complicated question. There are a number of interconnected things, but as many of you know that what is unacceptable in the South African economy is that we're growing at 1%, less than 1%, and when that happens, the unemployment rate edges up and we're above 27%. Now, what explains that are a number of factors. The one is that we have for several years had low demand in the economy, but that is one small part of the story. There are many other parts of the story, most important of which, what drives an economy is investment, and investment has been really low for a very long time, and that low investment is a major constraint on the economy picking up. And what lies behind investment being low is a number of things. We often talk about this, and firms, whether you're a small firm or you're a big firm, need incentives to invest, and if you feel uncertain about the environment, you don't invest. So I think that there are a number of different things. I'll end there and maybe allow more conversation on it if there are questions.
Okay, thank you so much. So there are arguments that possibly the interest rate is not pitched at the right level. Dr. Luerveld, what would you say about this?
Thanks, Koketso. Well, I think like a lot of people, I have debt, and any interest rate seems too high. But having said that, South Africa is in a recovery process from the global financial crisis, and interest rates prior to that crisis were much higher. And our real interest rate level, so the nominal rate adjusted for inflation, was about 3%. In the response to the crisis, nominal interest rates have come down. They fell as low as 4.5%. And that gave you a real interest rate of about 0, so about negative 0.5 to 0.5, positive 0.5. And then as the global economy has recovered, the interest rates have gone back up a little bit. So South Africa raised its interest rates between 2014 and 2016 by about 200 basis points. That's the repo rate. And that's given us a real repo rate level that is about 1%. Now, so from a historical perspective, it's still very, very low. From a comparative perspective, it's useful to look at as well because South Africa competes with other countries for global savings. And so you do need to look at how our interest rate levels are compared to others. And in the monetary policy review, we have a nice page, I think it's page 39, which shows South Africa's comparative performance. And we're around the median. So our nominal and our real interest rate levels are in the median of a range of emerging market economies.
Okay, thank you for that. So the governor also spoke about inflation and its impact on everyday South African lives. Fundi, what would you say the impact of electricity and fuel price inflation is on everyday South African lives?
So thank you, Kukeso, for that question. So electricity, which we consume on a day-to-day basis, of course, is something that we have to deal with. And as households, that's a price that most of us have to pay every month. It's a consumable. And the governor mentioned earlier that Stats SA has this basket of goods and services, 412 goods and services that are in the CPI basket. So when one looks at the weight of electricity in the CPI basket, it's about 3.75% of the total weight, so fairly small, but it's because it's an average of how much just all South Africans in urban areas are spending. So when one takes that into account, after the NERSA price increases this past year, we're estimating electricity price inflation of around above 9%. And now that varies, of course, according to whether you have a prepaid meter or you don't have a prepaid meter because the tariffs vary across households. But we as the central bank would look at what is being reflected in the Stats SA basket. So electricity prices, I would say, have been rising on average at a much higher level than other goods that are in the basket. So they are some of the prices that are contributing to higher inflation. Fuel, about 4.5% of the total basket. Fuel in 2018 was probably the highest contributor to inflation. So fuel price inflation went as high as, it went above 14%. And that's because it's a combination of factors. So South Africa produces a little bit of its own fuel, of course. Sasol produces some crude oil through coal. But the prices that they charge still are at an import parity because they use the international crude oil prices. So crude oil prices went up significantly during the course of 2018 at the same time that our exchange rate was much weaker. So the combination of those two factors then contributed to higher fuel prices. Some of you would have felt that when you went to pour petrol, taxi prices went up. Again, one has to recognize that this basket is very different. So what we have in the MPR is we have a box that tries to explain why you have different levels of inflation across different income brackets. So you have got the total basket that we use at the Reserve Bank, but we also recognize that you have got different types of inflation. But yeah, so let's leave it there for now, and then if there's more questions, I can deal with those.
All right. Okay, I hope that has opened up your minds to the discussions today. I think we can open the floor up to questions. Please do engage us, ask any questions that you have for us tonight, and we will get the MPC panel to respond. Okay, so we have one question here in front. Maybe we can take that question first then in the meantime.
Thank you very much. What I would like to just know, there is this graph there about the inflation on the price of bread. Now, around 1990, the price of petrol was about 140. Today I pay 16 rand and a bit. The country is still here. And that's a significant increase. As a young boy in Soweto in the 70s, our grandmother would send us with about 1 rand, sometimes 5 rand to the shop, and you'd come back with a number of goods, Coke, whatever, out of 5 rand or a rand. The country's still here. You can't take 5 rand to the shop to buy much today. The country is still here. I suppose my question really is this, that example that you showed us, is it really a fair example when we've got examples that we know? That is a speculation. There's something that we know that we've lived through. I've been in the petrol industry for a few years. We've lived through this. I just want to know whether are we not really focusing on the wrong things and not presenting the case with the greatest accuracy and precision. And this links back to the points that were raised by our colleague there, that he seems not to even know precisely what are the major things that are causing this economy not to grow.
Okay. All right. Governor, would you like 3 questions at a time or more?
It's not just me.
For sure. For sure. Yes.
We ask people to just mention their names when they're asking a question so that we can
No problem.
respond,
Okay.
use names when responding.
All right. So can you just give us your name before we move forward? I think we'll take 3 questions at a time, then we'll break it off and continue thereafter. Yes?
Thank you. My name is Sandile Swana.
Sandile,
Sandile.
thank you so much, Sandile. Okay, can we get the second question here?
Good evening, Governor and the Deputy Governors. My name is Rufus Ramotevele from BIAC, Black Insurance Advisors Council. My question is about the crude oil. If Sasol is producing crude oil, why are we paying so much, and why are they charging in international terms? So I would like to know, why is it like that? Because we should be paying lesser on fuel if it is really producing the crude oil. Thank you.
Thank you, Rufus. We'll take that question and then we'll respond.
Hi, colleagues. My name is Michele Capozzaro. I'm from DNA Economics. So my first question, and I'll get to the rest maybe through the rest of the evening, but the question that I want to pose at the moment is, Dr. Lewald was talking about kind of coming out of the throes of a sort of the financial kind of crisis in 2008. I'm actually interested to know what the Reserve Bank, or what variables really the Reserve Bank is looking at for the next financial crisis. So are we looking at household debt levels? Are we looking at mortgage prices once again? Maybe you could give me some clarity on that. Thank you.
Thank you.
Okay. Who wants to go first? Shall we start with you, Kuben?
Sure. Let me attempt to deal with Andile's question. There are two parts of your question. One is the fact that the cost of living has gone up, but the country is still here. And the second part of the question is, why is there weak growth? Am I correct, sir? How do you get richer as a person? Right? How do you get richer? You get richer because you can buy more stuff. Right? So let's assume that I earn 100 Rand today and the price of bread is 12.95 Rand. I spent 12.5 or 13% of my salary on bread. If tomorrow I earn 200 Rand and the price of bread is still 12.95 Rand, I've gotten richer. Right? I can buy more bread and I can buy other stuff. If, however, I earn 100 Rand today and tomorrow I earn 200 Rand, but the price of bread has gone from 12.95 Rand to 40 Rand, I am poorer. I might double my salary, but I am poorer because I can buy fewer things. Right? Countries get richer, people get richer because you can buy more. So your salary will go up over time. Inflation is part of that. Your own productivity growth is part of that. Moving from one job to another, your own experience is part of that. The lower you keep inflation, the richer you become. Right? If we don't do our job, it'll be harder for you to become richer. Not to say that it won't happen, it'll be harder. You will be competing against price increases. So today you earn 100 Rand, price of bread is 13 Rand, you get a salary increase, but it's consumed entirely by the increase in the price of bread. You are the same place. You haven't grown. So keeping inflation down is an absolutely essential point about getting household income up, getting household wealth up. Right? And that's why we do what we do. Because at the end of the day, your salary will grow. We're trying to make sure that you are not fighting against the forces that are pushing up prices so that your standard of living actually goes up. Why growth has been weak for a long time, I think Rashad touched on it, but let me try and expand on that. Since 1994 up to about 2012, 2013, South Africa generally tracked the global growth rate. So when the global economy was growing at 3%, we were growing at about 3.5. Global economy was doing 4.5. We were doing 4.5, 5. For the last 6 years or so, we have grown at about half the rate that the global economy has grown at. Right? Which tells us that in general, for the last 6 or 7 years, we've been underperforming what the global economy has grown at. The reason for our lower growth is not because of international factors. It is partly lower commodity prices, weaker growth since the financial crisis, but we are underperforming that. And so the reasons are largely domestic. The reasons are largely to do with investment, with business confidence, with household confidence. Let's assume that you've got R1 million, right? What type of business would you invest it in? Let's assume that you invested in a cell phone shop, right? The certainty within which you would make that investment, you want to know that certain things are going to be stable and predictable for a long time. What's the long-term outlook for data costs? What's the long-term outlook for electricity costs? What's the long-term outlook for rentals? What's the long-term outlook for labor costs? And you take a view. If there is uncertainty around that, you won't invest it in that business. In the last 7 or 8 years, there's been significant uncertainty around major issues, and so that's held back investment. If I've got $1 billion and I want to sink a mine shaft, would I sink the mine shaft in South Africa where I'm not certain about what long-term ownership of the mining sector is going to look like? I'm not certain about what the long-term price structure of electricity is, which is a very large input. I'm not certain that the municipality will give me the services that I can. I'm not certain what the carbon tax is going to be, what the fiscal policy is going to be, whether I can get rail capacity to rail my stuff to the port when I want to. So I take my $1 billion and I go somewhere else to invest in a mine. Right? That type of business confidence, leading to investment is one of the main reasons why the economy has slowed significantly in the last 6 or 7 years. The efficiency of our spending, right? We've spent just under 400 billion rand on 2 coal-fired power stations that's supposed to produce in total 9,600 megawatts of power, right? Similar power plants elsewhere have cost somewhere between 200 and 250 billion. We've spent 400 billion, and they're not yet finished. They're not yet supplying 9,600 megawatts, right? So it's the same. If you spend 100 rand on something that you should have spent 80 rand in your business, you're not going to make the proper return. The efficiency of spending, right? In many areas, the quality of our education system is an input into long-run growth. The quality of the public transport system is an input into long-run growth. The quality of our infrastructure, rail, port, electricity, is an input into long-run growth. And we've seen a deterioration and an underinvestment in each of these areas. So in our view, those are some of the reasons that explain weak growth. Right? Not all, but some of the reasons.
Well, thanks, Kuben, that's good. I mean, we used the price of bread. You could have changed the bread there and put on the price of any other thing. It could have been the price of a glass. And as you said, you were in the oil industry. I could have put the price of a pump nozzle there and says this was the price of a pump nozzle. If the price of that pump nozzle goes up by that inflation rate for 10 years, that is what you will end up paying. So the example will still hold whether it was bread or not. And I'm so glad, you were talking about the 70s. In 2015, I went back to my village in Moleji. And I went back to the same store where every morning I would go and buy bread. I was a nightmare for the shopkeeper because if I had to be at school at a particular time and the shop is not open, I used to go and knock at the house of the shopkeeper and says, please open the shop because I need bread. I must go to school. And the shopkeeper would, without an argument, just get up, go open the shop, and I would get bread, and I would go home. I went back there to launch the bank notes that were bearing my signature in 2015. I had 380 rands. Not much had changed in the shop. The counter size is still the same. I was a little bit taller now. I'm a little bit taller now. During those days, I used to climb so that I could pay, and now I could pay without climbing. A loaf of bread was 10 cents at that time. 10 cents. That is what it was. And see what had happened. So the country is still here. The bread is no longer 10 cents. It is 12 rands 95. The only thing that would have kept us roughly where we were then would be that salaries and wages either grew at the same pace or grew more than the pace at which those prices were rising. If the salaries and wages were growing slower than the rate at which prices were rising, as Kuben said, we would have been much poorer. The crude oil price and the production by Sasol, what Fundi didn't tell you is that Sasol only produces about 30% of our oil requirements. The other 70% we must import. So you can't have two prices, one for the one that you have imported, another one for the one that you had produced. So we literally have a blended price. It would take into account what is called the landed cost. In other words, what does it cost us to bring the oil here? Because then that affects the price. And that is why the price of petrol is still related to what happens to the international oil prices. Nigeria does not import any of its oil. It produces its own oil, and they had decided that the locals will not pay the same as the international. And guess what happens? There is a long queue. If you have to fill up your car in Abuja, there is a long queue overnight. So you literally park your car there waiting for the queue because they had run out of the refined product. That is if you want the one which is subsidized by government. Otherwise, just down the road, there might be a truck or another filling station that is selling the fuel at market prices. You can get up there, and within 5 minutes, your tank is full and you can leave. So you can't quite split these things without causing that kind of a distortion. You might find that there is a long queue standing elsewhere. DNA Economics, I'm sorry, I'll refer you by the name of your company. I couldn't quite catch your name. There's this little thing in my ear. Variables of the next financial crisis. Look, we do not know when the next financial crisis is going to hit us, and quite frankly, what would be the key drivers? The source of the previous financial crisis was mainly the developed world. Initially, it was the US with the subprime loans, and then later on, the weaknesses in the European banking system. Globally, at the moment, the concern had been that the low global interest rates had enabled lots of borrowers from emerging markets to borrow lots of money, mainly in US dollars. And their currencies had appreciated because the interest rates in the US and in Europe are so low. And that should that turn, many of those emerging market companies would be in all sorts of trouble. That is the one source if you are to look at emerging markets. The second source is a highly leveraged debt in the US. We are once again seeing the originate and distribute model rearing its head once again. And the bulk of the debt that is issued by companies that are on the brink of investment grade, that they could fall into junk status, and that becomes a concern. And the third is what is called covenant light lending. In spite of interest rates being low, the high quality borrowers are not borrowing, and as such, the lenders are going for borrowers of a low quality, and they change the covenants, which basically the standards against which the lenders would avail funds. That could be the source of the crisis. That said, the core of the global financial system is more resilient than it was in the build-up to the previous financial crisis. We have got the core well capitalized. The liquidity is good in many respects. And actually, the exuberance of the banks that we had seen in the run-up to the 2008 crisis has tapered off. And actually, many banks, when you go through globally, many banks are actually shrinking. So as it is said, if it is too big to fail, it probably is too big to bail out. And the fact that you are seeing the adjustment is actually a welcome development. And lastly is that you are seeing the pension fund industry and the insurance industry seriously exposed, and that could be the next thing to hit us. In the developed world, they are facing huge demographic problems because not only are they aging, they are actually living longer. It's not that living longer is a bad thing, but it's not necessarily a good thing for your pension fund, because it means your pension fund must pay you pension for longer than it had planned to do. But what do these pension funds in the, if you are a pension fund in Europe and in Japan, what do you invest in? You have to pay government in order to lend government money instead of government paying you, because interest rates are negative for $14 trillion worth of bonds outstanding. Interest rates are negative. And if interest rates are negative, that could be destroying savings. And what that meant was that it was supposed to encourage consumption, but still people are not consuming because people are worried that they are living longer, and because they are living longer, they have got to provide even more saving. And you have also seen that some of the countries are increasing the retirement age, because what is the point? Because people live longer, so we would rather than keep them at work for a little bit longer. How does South Africa fare in all of this? South African corporates do not binge on foreign currency denominated debt. It is higher than it had been, it has risen. It's concentrated in companies that are exposed to foreign exchange earnings, and that sort of like cushions them, with the exception of the exposure of the state-owned enterprises that have borrowed, offshore. The South African banking system has not quite lowered the standards, and as such are not exposed to poor quality borrowers. And lastly, this being savings month, the South African households have actually been repaying their debts, which is a good thing. It's a welcome thing. It's been repaying their debts, and when you look at the balance sheet health of the household sector, you will realize that the households are repaying debt, and because they are repaying debt, that means that they are also beginning to save, which suggests that as the economy begins to pick up, the households would be able to take advantage of that. That is the aggregate household sector. If you break it per income, you will find a different picture, though you will find that the lower, middle, and income earners might be still experiencing some stress with respect to their borrowing.
Okay. Shall we take the second round of questions?
Yes.
My name is Busi. I'm from the Financial Sector Transformation Council. I've got a question for Mr. Naidu on something he said regarding the banks. He actually said that our main banks won't lend to small businesses or to black businesses. Instead, we need to actually look at starting a black bank that can service these markets. My concern is whose deposits are held by these big banks? Are they only holding deposits of certain groups of people that they service and not everyone else? And if they are having all our deposits, can't the government put measures to make sure that they also service all the population in this country? I also heard the governor just now saying that our banks have not lowered their standards. Could that be the reason why our banks are not lending to black people and to small businesses? And my second question is, if we were to have a black bank and also looking at the cooperatives that we have, what chances of survival do they have looking at the kind of concentration and monopolistic nature of our banking system?
Okay, thank you, Busi. Can we take the question on that side, then I'll come back on this side.
Governor, welcome once again. You'd remember that the last time I did not talk. My name is Mputi, by the way. I'm with the Soweto Business Access. Last time I did not talk because the previous time you were here, which is the second time, I'd asked that you allow us Sowetans to organize your visit to Soweto. I want to reiterate what I said the last time. This is not a reflection of Soweto. The poor turnout here is not a reflection of how we feel about you as the Reserve Bank. So I'd like to once again, with your esteemed guest, ask that you allow us to organize your next visit to Soweto. That's number one. Number two, since we last met, I'm happy to announce that the government, on a national basis as well as on a provincial basis, they've adopted policy that talks about reigniting township economies. We're in East London last year, where we talked about revitalization of township economies in association with the DTIs, with the Small Business Department. And then last week, we hosted the Premier of Gauteng. And in the course of the Premier being in Soweto, he was sensitive to the wishes of this second economy, which we call townships. So my point is, you have come here for the fourth time. I'm not seeing innovation in terms of the policies from the Reserve Bank as far as igniting this second economy in townships. The reality is that, yes, we now have access to, you'd remember that we've lobbied the post office to pay grants, 10 billion rands worth of grants through SPAZAs, and they've agreed. But the cost of us accessing funds to be able to be ready to service that, it's still not affordable. So, in short, Governor and your esteemed guests, I'm saying, please, when you come to the second economy, please don't talk the language that certifies, foreign investors in the JSE. Talk to township investors in the townships. We have not seen any innovation since you've come here. I've not heard you saying you've incentivized any type of investment in terms of the policies that you've adopted that are going to reignite the economies of the townships. Thank you.
Thank you, Mputi. Can we take one last question on the side?
First and foremost, I just want to thank your high esteemed guest. This is just one of the best symposiums ever. Like literally, I just got from my whereabouts. So literally, I had a couple of questions. Like I'm a young person, essentially. So since I'm a young person, I came to Westerners. Oh, sorry.
Just speak closer.
Closer. Oh, sorry about that. Sorry. All right. So I come from a black society, literally. So you look at the apartheid area, the brink of democracy within our country, status quo. So we don't understand the pros and cons within the economics of our country, like literally, right? When you depart from school, so it's elementary school, then from elementary you go to secondary, and then secondary you go to varsity. I get to varsity level, right? Varsity level, accomplish my degree, but still, I cannot understand the SWOT analysis. SWOT analysis, monetary standards, assets, liabilities. That's why you find that in the status quo of this country right now, black people have so much debts. It's not that they have so much debt because of they unwillingly know what goes about within the economic set of this country. It's just that we don't understand the pros and cons within our economy. So I think it's very much vital that in this modern day society, since we're sending to the fourth industrial revolution, that black people shall be conscientized about financial strengthening, because of financial strengthening in our country is very much minimum within our society. You come from the village, understand this. So when you come from a village, you had aspirations approximately to study economics. Not every black individual within our society has those aspirants, right? So I think that it's very vital if you understand that core and you try to go back and just to unpack to your black society, able to understand the pros and cons within the monetary standard, because of such things are very much fragmented words to our people. So as the gentleman spoke right there, he spoke about township economy. So it's very vital that we equip our society, because if not everyone has the pros and cons to go to varsity. Those who have skills, impart them financially, and that's my point of view. Thank you very much, and may everyone have a blessed night. Thank you.
We didn't get your name, sorry.
My name is Katlego Dladla.
Katlego.
Yes, ma'am. Thank you.
Katlego.
Thank you very much.
I suppose that was a comment.
It's a good one.
It's a good one. Suppose it's a comment, rather?
It's a bit of both.
Okay.
I'll say it's a bit of both.
Can you just stipulate your question in one line, just so that...
I'll just say this, right. Within the status quo of our country, it's very vital that our people within our country know the pros and cons of economics. That's it. That's one thing I just wanted to ask about. So, yeah, just teach, conscientize them, not conscientize them, but give them the fullness of this. Because of hindsight said, not everyone is privileged to go to a high institution capacity to understand the pros and cons of economics. Thank you very much.
Thank you, Katlego. Can I take one last question?
Yeah, take.
Yes. Maybe we can go back to that side, if you don't mind.
Take two more.
Is it me? Good evening.
Yes, sorry, it's...
Good evening, my name is Mishek Musia. I work for a company called Planet Care. In fact, I'm a co-owner, Planet Care Waste Management. Good evening to you, Governor, and your team. My question really is directed to Mr. Naidu. You touched on the licensing of banks, and I saw a pronouncement by yourself, I think last week, on the African Bank, where the bank intends to sell off its stake. Does it mean the African Bank is turning the corner in the right direction? And if so, can you elaborate on that? Thank you.
Thank you, Mishak. One last question, please.
One more, not one.
One more. One more question. Not one last question.
Thank
Pardon?
you.
Yes, I'm going in the middle. I will come to you, I promise.
Keep the mic there.
Thank you for the opportunity to the committee. Thank you for fielding this. Gabriel Krishna, foremost Treasury Management. Want to claim we are a black financial institution, but we are fairly small. But I think the question is directed at Mr. Naidu and supervision of said banks. We hear from Standard Bank most recently, they're closing 91 branches and people are getting unemployed. Suspect these branches are in township economies or rural areas and the like. And we heard before that unemployment is one of our major problems. And said banks are actually making people unemployed. When we're hoping for the digital banks and the fourth industrial revolution to come through, how are we going to employ people when we're looking for technology to replace these actual human bodies performing these functions? That's my question.
Thank you, Gabriel.
Could we take that?
Yes.
My name is Dan Mahashat. I think last year I was here. Number one, I just want to, the Reserve Governor, congratulations. I don't want to repeat what the other people said. I believe very soon, by November, the chances of either re-engaging you for the next 5 years, I only hope they're going to do that because they're doing a good job. But the point which I want to drive here, let's go back for the last 25 years. I've been listening to everybody there, including yourself, whether we're in the right track, right direction, or are you missing the boat? From what I heard here, it looks like there's a problem which needs to be defined by yourself and the other players. Players with the Treasury, which are working in hand You get other DTI or economic development. The question is, if before, for the last 25 years, we are not doing well, what's the problem? Do we have the right players who are driving this country properly? Do they listen? There's a question. If no, do we need, don't it's a hard time do we need to get business people to run this country together with yourself? Because what is happening is not good enough. You touch on the electricity, the inflation, the petrol, education. If you deny the nation education, you destroy that nation. I'm sure you read a book written by Robert Kiyosaki, Rich Dad, Poor Dad. Recently, he written another book called Fake Money, Fake Teachers. I think on the 7th and 8th September, he'll be hosting 2-day summit at Santon Convention Center. Where are we? People are poorer, affordable, cannot afford anything. People are not working. Too much looting. Too much fighting among ourselves. Raymond Commission, very expensive. Who's paying for that? The very same poor. From yourself as a governor, who are trying to tiba the inflation in order for everybody to survive. Did these people listen to you? Did you go out and have a strategic planning and say, you guys, we don't go out here. We lock ourselves here, somebody will come and do the catering for us until we get the answers. Or else, I see this problem coming. There's a generation gap here. You and I think a couple of years ago, 76 back, I think we were together in Black Management Forum, together with Moss Machine. All the things will be happening in 1976, today. Where are those people? We are here. Engage us. We don't need what is happening there. People fighting for position. People fighting for, we want nitty-gritty. Gentleman may raise something about, are you reaching the people enough? Why can't you engage us to help you? We are here as business people. Dan Mahasha, by the way, I'm a property valuer. Where are those opportunities that are given to somebody else? The foreign nationals. There are so many sponsors here. Because are we lazy? We as South Africans? Are you collecting? Is SARS collecting more rent, more this thing, tax? The money is sitting there. As long as they got the papers, why can't you tax those people? Why can't you tax those people? I know you people will have your own endeavor where you discuss things, which really, they are really rampant us in the country. Mr. Governor and your team, this question is not directed to the governor. It's for all of you. Thank you, sir.
Thank you, Dan.
Okay. Who wants to start? Rashad, you are having a good time.
I think that one of the problems as a central bank is that we come and sometimes we disappoint you because many of the issues that you have major concerns about falls outside of our domain. So there may be this kind of mutual frustration either way. I mean, I think that one of the things that's quite important for us at the central bank is to kind of engage with you on how we see the economy. And I think that's one important issue that we bring here, that we're excited about engaging Sowetans on how we, with the kind of expertise we have, about how we see the economy, what are the problems in the economy, growth, inflation, and so on. There's obviously the issue of regulation and so on, of which many questions are directed to Mr. Naidu. Another important role is that, we also want to give you a sense of what our limitations are. For example, recently in the Financial Mail, there was a very, very powerful article on how dysfunctional municipalities have partly explained why the economy is in the state it is. People struggle to get services, municipalities in many districts are not working. Now, that is an issue that obviously goes well beyond us. You obviously have to hold municipalities accountable for this. So I think that we have to moderate expectations of what is it that we can deliver on. But we, as a central bank, want to be accountable and explain why is it that we're not obsessed with inflation at the cost of growth. We know that when there's some inflation, moderate inflation, what we call 4%, 4.5%, is not, the be-all and end-all. You have to look at other factors in the economy and so on. So I think that, that's an important issue to bear in mind. The input you give us about, knowledge you have of the economy is also important in the way we think about policy. One thing about issue around literacy and which racial or demographic group has lots of debt. I mean, ironically, you can go to any country. It's not a cultural thing that one culture has more debt than the other. Debt is a problem, in many parts of the world. In fact, one of the reasons why we had a financial crisis was because of excessive debt. And it's not that, black people have more debt than white. It depends where you are. I mean, some of the middle-class people are racially are highly leveraged. So I think that the issue about debt is why are people borrowing? Is it desperation because incomes are not sufficient to basically put bread on the table? Are people borrowing because of other reasons? But I think that sometimes there's no kind of racial dimension to it. It's people along the spectrum are leveraged and so on. Talking about race, I think another important thing to also bear in mind is as we're trying to transform this country into a more inclusive country. It was almost wrong word of the use, exclusive. But I was a head of School of Economics at Wits University. And, the majority of classes today, the majority of master's classes in economics and honors classes are black students who are excelling and doing very well. These are not black students in the historically Bantustan University, so to speak. But I think the problem here in this country is a class problem. Levels of literacy are very low, and that's also across the board. So I think that there are these dynamics, and the central bank the Reserve Bank through its kind of it has something called the Monetary Policy Challenge, and a number of things in its small way tries to contribute to this. But let me leave the other comments to some of my colleagues.
Fundi?
Okay, right. I think that, of course, one of the challenges we also have as the Reserve Bank is sometimes you just look at the statistics, South Africa data, and like Rashad is saying, it does help to come to fora like this to try to understand what some of the underlying issues are. I think that particularly in terms of just understanding price formation for us, that's something that's quite important in understanding why is it that, for example, when you have things like wage negotiations. People are asking for the level of salary increases that they are. It's useful to have that bit of a context. One area I wanted to pick on was a question that Kuben will address around Standard Bank, but I don't want to talk about Standard Bank. I just want to talk about just what is a global trend as we're moving towards having a more digital economy, more uses of technology. And this is a conversation that's not just happening in South Africa. It's happening in many, many countries about what is going to happen, what should governments be doing. And one of the things that we have to think of as a country, of course, is what are the trade-offs? And often we talk about jobs because jobs are very personal to all of us. But as a central bank, we have to think more about people. So how do people get protected when they lose their jobs? And that's something that we have to think about as policymakers. And the conversations that we've been having is, what is the type of assistance that government then gives to people who lose their jobs? So a very recent example was, how did we respond as a country when we had the global financial crisis? So very quickly, government marshaled some resources, and we used some of the resources from the UIF fund, which was to help companies in retraining some of their staff. So we have to start to think in a more progressive way about how is it that we're going to make changes to our education system. How is it that companies can start to retrain people who might be displaced when you have changes in technology? Of course, some companies are very progressive, and automation is not a very new concept in South Africa. The car industry is an example of how companies have basically not laid off many people, but they have retrained their own staff by having a very broad training program with their sector education entities on how do we reskill people to be able to utilize the new machines that are coming through. So this is an important conversation that we have to start to have as a country of what do you do with people who might be displaced, and it's going to be a conversation that we're going to have for the next while. Now, with regards to innovation, of course, as a central bank, I'm sure the governor and deputy governors will talk about this, but just I think that part of the limitation that we have as a central bank is we are created in terms of legislation, and we have a fixed set of skills that only allow us to do certain kinds of things. Now, we don't want to come here and overpromise you and say we will do X to ignite the economy or to reignite the township economy, but we believe that we perform a very important function around price stability. And often it's seen as the central bank is being dismissive of other things that the central bank can do. But we think that this is something that's quite important for those businesses that are in the township, for households to have stable prices. It helps you in terms of your planning to know how much am I going to be paying for something. It helps you in terms of doing your budget over time, and as Kuben said earlier, it helps in terms of growth of your business. So if when you make money in your business, the income that you make is not paying off costs that are rising very fast, it helps in terms of wealth creation over time. So we believe that this is an important function that we perform as a central bank. The work that we do does not allow us to have very significant impacts on individual sectors or individual areas of the economy, but for the economy as a whole. So in a way, we work at a helicopter view, but we need to do that broadly to ensure that the whole economy is healthy. So that's where I'll leave my comments.
I'm going to hand over to Deputy Governor Naidu, but before I do that, I just want to run a very quick survey. Deputy Governor Naidu, he must still answer the questions. So you are raising your hand. It looks like you answer the question I'm going to ask now. I just want to check in the room, anybody who had visited the branch of their bank in the past month? In the past month. And the rest of you who have not visited your branches, the branches of your banks, how do you do your banking? This is my point. So when we complain that branches are being closed, we must understand it's because the branches are now on this little thing. That is where we are now doing the business. So we have got no incentives to go to the branch unless you are running a business and you have got cash to deposit and you would want to go and deposit the cash. And with all the risks that it has, many times if you could get somebody to pay you through a cell phone or through some internet transfer, that is clean because you get a notification that says the money is in your account and you do not have to worry about that. And that is what is actually driving the banks towards saying we are now closing the branches. And in some instances, even if we didn't have to deposit money, we used to go to the branch either to get our statements, and now we get them on the phone. We used to go to the branch to collect our checkbooks. Who still has a checkbook? Right? You see, this is the point. And so we've got to accept that you are having this move. So branches are closing, so people will no longer be in branches. But there are other people who are now starting to look at people who are selling data, repairing cell phones and all of those. These are jobs you wouldn't have had before. But the way in which we think as human beings is not that I have lost my job and SIPO now has gotten a job. You do not understand. I have lost my job. There will be no bread in my family. That SIPO's family is going to have bread. That is SIPO and SIPO's family. I have lost a job, and because I have lost a job, that is what we must deal with. And so to the Fundi's point, to say that we actually be in the government policies, that you transition people, that as the nature of work changes, that you transition people from one kind of job to the other. As a youngster growing up, I used to admire visiting my uncle who is a priest. And some parish had given him a gift. They give him a set of Britannica encyclopedia. And I used to go there and go through those encyclopedia looking for clues for my projects. And I wished that one day, when I start working, I'm going to buy a whole sort of encyclopedia so that my kids do not have to go to an uncle to look for stuff in encyclopedia. Enter the internet. What happened to the people who used to sell the Britannica encyclopedia? Gone, right? Because these days, I don't know if there are any teachers here, you give these kids an assignment, and then I Googled, and I can't find it on Google. If it is not on Google, it doesn't exist, right? So that is the evolution of technology, and that is what the reality that we are going to face, and the kinds of policies we need is to actually transition people to move into this new economy that we had talked about. Let's talk about the township economy. It's always a complex one, and I know people are talk about these things. Maybe I shouldn't even venture there, because what I wanted to say is, okay, let me just say it. Typically, This time of the night, we would be arriving from town with plastic bags and so forth for the evening. And for those who are wage earners, Fridays were good. Fridays used to be the only time I could have fish and chips because my father would come back from work, he would have bought some fish and chips, and I didn't care that it was cold, right? Friday was the day he came home with fish and chips, bought from somewhere in town. And he would be arriving with plastic bags, carrying stuff from town. So when we talk of the township economies and talking about developing township economies, are we talking of bifurcating the townships and isolating them from the rest of the economy? Or are we talking of creating the townships to be centers of meaningful economic activity connected with the rest of the economy? It's a very important conversation to have because if we bifurcate the townships and we do not interact with the rest of the economy, that means that we either spend our money here and we will buy whatever we can buy where we are, and the rest escapes us. And to the extent that we are producing things in the township, we only want to sell them in the township, whereas the township is going to be rich because the township is producing things that other places actually want. If you were to translate that into a country and think as follows, and say if as South Africa, we only produced goods that South Africa needs, we're not going to get rich as a country. Because the other countries will produce things that we need that we are incapable of producing, and they will earn income by selling them to us. Countries get rich by producing not just the things the country needs, but the things that other countries need. And if you were to think of a township or isolate Soweto now, and think of Soweto as a country, you would say that Soweto should be producing the things that the other countries need. And that is how Soweto should be interacting with it. I know that there are people who talk about how money can be kept in the family. That is good, but the family is not going to be rich by just circulating money amongst themselves without accessing money from the other families. And how are you going to access money from other families? By producing things that the other families need. So I hear you, and I know the Premier was here. It's having that conversation that says that we should not think of bifurcating our economy and isolating the townships, that we developed townships to become centers of meaningful economic activity that interact with the rest of the economy. So that is how I would think. One is, I've had you on the thing. I've got a completely different communication unit. It will engage with you. You say that the Sowetans would like to organize this, and it's always good that the Sowetans organize some of these things. And by the way, us coming to Soweto does not have to only be because we have organized the MPF. There are organized formations in Soweto, and if you want to interact with us and you have organized something, we are happy to come and engage with you. We will do it. And do you know what the nice thing is? It is your central bank. We won't charge you to come and speak to you.
Thank you, Governor. Let me deal with the issue around sort of banks not lending to businesses. Right? It is not a new problem, and it is not only a black problem. It's been the problem for 100 years in South Africa, and even white businesses will tell you that they battle to access credit from banks. Right? In fact, if you look at the data, if you take a turnover of less than 300 million rand a year, which is fairly big, only 8% of bank lending in South Africa goes to firms with a turnover of less than 300 million. The international averages is significantly higher. Right? It's not only black businesses that battle to get funding. It's a long, complex story. One of the discussions that we have with the banks is around implementation of their financial sector charter commitments. The banks are increasingly obliged to consider issues around the township economy, SMME lending. There's been at least 2 initiatives launched by banks. The one bank has set up a fund with R1 billion, separate fund, separate entity that says to this, you mustn't just give credit to small businesses, you must take equity stakes too. Right? Another bank has partnered with a public sector organization and has launched a R250 million township economy fund, right, to give loans to businesses in the township economy. So we are putting pressure on the banks to lend to businesses, to lend to SMMEs, to take the township economy seriously. We at some point do have to draw a line. We can't tell them, no, you must lend to that person or lend to another person. Because when there's a default, they'll come back to us and say, no, we want a subsidy. Right? And if you put your deposit in the bank, then you want to know, but my deposit is not safe. Right? So within our powers, within reason, we are putting pressure on the banks to increase SME lending. We are putting pressure on the banks to support the township economy, to support businesses that can grow and that can sell goods even beyond the townships. It's certainly part of the strategy. I didn't make the point that you need a black bank to lend to black people. There must be pressure being put on all banks, irrespective of who they owned. And if there is a black-owned bank, you must also put pressure on them. It is not obvious that if you have a black-owned bank, it will necessarily lend to the township. It's not obvious. There are black-owned financial services companies in South Africa who don't necessarily service the townships. Right? And so as part of those charter obligations, we are putting pressure on the banks to do that. And we will continue to do that. What are the chances of survival of a black bank in the context of a very concentrated banking system and large banks? Actually, on the positive side of lower technological costs, is the cost of setting up a bank is actually falling. Right? I used an example earlier in a lecture to some students that 5 years ago it would cost between 10 and 15 billion rand to build the IT infrastructure of a bank. Today you can buy it off the shelf for 200 to 300 million. And it's not secret, I'm not telling you anything secret. One big bank in South Africa spent 15 billion on their core banking system 4 years ago. The new bank that was licensed, that is now black-owned, they bought their core banking system off the shelf from a company in Germany for 150 million. They spent another 350 million customizing it. So for 500 million, they've got a core banking system. This big bank spent 15 billion 4 years ago. Right? As the costs of technology are falling, you are getting innovations. You are getting significant innovations in the financial sector, and that is, at the moment, there's a price war in the banking sector. Right? There's a price war because we are trying to promote competition. Banks are cutting costs, cutting fees. Right? And we think that this is positive for inclusion, it's positive for the dynamism of the sector. Of course, our primary mandate is to ensure the safety and soundness of institutions, and we will continue to promote both transformation and competition, but ensure the safety and soundness of those institutions. African Bank went into curatorship on the 6th of August 2014. It's now 4 years into curatorship. It was split between a good bank and a bad bank. The good bank is running, it's doing pretty well. I think that they're probably 1 or 2 years away from being sustainable and being able to stand on their own feet. At the moment, they're making R1 billion a year profit, so it's a positive story. I don't think they're fully out of the woods yet, but I think in a year or two, they are likely to be out of the woods. And I think it's a positive story of a bank going into curatorship and actually being rescued and taken up from there. Fundi's covered some of the issues about job losses in the banking sector and as technology changes. The governor's made the point about people transitioning from one job to another. Part of the tragedy of South Africa is that the quality of education has not improved at a pace commensurate with the technological changes in the global economy, right? So Standard Bank says that they're retrenching X number of people. I can assure you all the banks are likely to reduce staff numbers in the next 4 or 5 years. But there's jobs being created elsewhere. In the IT industry, the service providers to the banks, the telecoms providers to the banks, the network providers to the banks, the people who now build robots that do back office operations in the banks, those people are employing. But are our children skilled enough to get those jobs? And that's the problem. Right? You know, I made the point earlier about, in another context, that it is likely that in 20 years' time there won't be coal mining jobs in South Africa, either because they'll be replaced by machines or we won't need as much coal, or the world won't allow us to extract so much of coal. Will the child of the coal miner get a job in the new industry? Right? And that is the problem in South Africa. It's not that there is technological change. There is always going to be technological change. It's whether we are ready to benefit from that. It's whether our children are ready to make those transitions from one sector to another so that you can grow, you can get, effectively get richer. And I think that that's part of the problem that South Africa faces.
There was one hand there at the back.
And
We
there's
are
a lady
taking
in front here.
the last 3 hands. 1, 2, 3, 4, 5. And that is it. We will interact outside. You can continue the conversation there.
Good evening. Thank you, Deputy Governor, for the last information that you've given. I've brought another colleague in my other field from Ndlovukazi CFI, and she's always said I talk a rough language, but it's not. It's very technical, to the point. And then she gets to ask me about the happy socks of Naidu and the governor. I said, you know, they don't know. I am going to be coaching them about certain things that after I've retired in 2013, I've worked for the 5 big banks, and I follow your articles, Mr. Naidu, because they are direct to the point, and I did economics, accounting, and all that. And I've always told my father that, and Khoshimoloto, that every time I go home to go drink red wine, he mustn't tell me about Khanyago. Because if Khanyago doesn't know me, and I've been in Gauteng for the past 24 years, and I've known politicians, I know administrators because I've done their financials, but I get the AG. But the 4 years I've been sitting with the CE of another entity, water entity, and we're talking about indirect coaching. Government humbled me. But I said, you know, you don't know Khanyago. I've known him. He was very young then. He was a DG, but he's very clear about politics. If there's one thing that scares the bankers the most, is political instability also, amongst the other things that were mentioned by Mefundi in terms of economic stability of any country, or what brings investors. But when I'm saying what humbled me is that, you know, you think either, and it can be a doctors or whatever business people, what we didn't get as bankers, Mr. Naidu, was that what the Deputy Governor said about taking 100 million, and I was one of those people that we gave to Gauteng Enterprise Propeller. We said, we will partner with you because the bank, from the ABSA perspective, there's a certain market, it's segmenting of the market. And you also don't understand that there are institutions like your NEF or like your provincial, people don't get those basics, and hence some of the question. If your stakeholder also doesn't give you, and I can call it a data analysis due to a lack of better word, a session like this will start by saying, I had people even then when I was younger saying, I don't come from Mulej, I come from Soweto. And I've always had that problem. But other townships do not like Soweto because they felt government and the international people invested more in Gauteng and especially in Soweto. We've got the 3 metros. If you don't segment, if you don't know who you are engaging in an audience, literally the questions will be frustrating. But having, when you see the premier, the protocol even of government, and understanding a mandate of every entity, I thought it was common sense until, disappointingly, I've been told that a corporate banker, underwriters, like the example you're giving on Time Bank, your Bidvets, what we buy to try and get a certain lower market, a higher market private bank, and this and that. I know all the banks. They've been retrenching. There's a certain, I haven't even been to a branch long simply because there are those reasons. When I studied economics, I didn't like teachers. I was a pain to my parents because they had to go. Because my economics was what is happening in my parents' fridge, what is happening to their teachers and their agriculturals. In fact, I came to Gauteng not because I didn't have land. I already have land. I don't know if Khanyago told you he also has a house there. When you're clear about budgeting, when you know 5 rand of what was 5 rand, but you have to then cluster people and say, this one would know that they are a doctor, or they are an engineer, that they are a normal general worker. Guys, money is subject to every person. Intergovernmental relations. If a minister comes to a province without informing the minister of another province, it's a problem. So I'm glad that this thing is from, and I'm saying, Mr. Naidu, I've been following your articles because I get them. It's information. It's direct. You're saying the top 5 banks will remain the top 5 banks, but in the next 10 years, perhaps, but there are other 48 other investment companies. So I'm still going to live here lost, and I will be following the guys around on the basis that for different people, they come to get a particular point, and it's said by a different person, and we note. And South Africa is United Nations. For me, it doesn't matter if it's said by an old person or whatever color. It's just particular something that I'm looking for. And where I'm sitting is that I'm going to have to follow you around the country, follow your articles, to get certain questions that I have as of today.
All right, thank you very much. My name is Patizwa from Portugal Coordinators. Maybe first let's congratulate the Reserve Bank for the sterling work you have done in the mandate you've been doing. You've bringing money, serious money for Treasury. That's a good job. But that money doesn't benefit an ordinary man on the street. So you have done splendid work that is wasted elsewhere. Maybe the gentleman who was saying you need to have this conversation with you, with the Treasury, and the government, because these fears are problematic, because you do one end good, then it's wasted elsewhere. It is a serious indictment to the growth of the economy of the country. I'm not an economist, but like the lady who said that, I follow what we have been doing. Another thing, I am really in support of the lad there that spoke about trickling down what you guys are about. You can go out now in the very mall here and ask them to name 5 banks. They will not tell you about Reserve Bank because we are not known. And I've been crying about these things for 4 years. And for 4 years, Mr. Governor, you've been just and giving me people to talk to. In every time they change, they still must understand what we are doing. So we will never educate the men in Muleji about what you do, even if you come from Muleji. We will never educate people. Now I'm in Spokane input. We're trying to draw what Sowetans do in terms of business into Spokane. I'm not an economist, so that people know about their money in their pocket. But it is not known. My frustration remains for the past 4 outings here. we don't know in the streets what Reserve Bank does. And we are explaining it here. It must be trickled down so that we begin to ask even relevant questions. Last time we asked you about the banking VBS. Well, you had nothing to do really with VBS. We've asked you questions about odd stuff that you need to, and you cannot account what the government does. But this is born on education. What Naidu explains is not what Tito Mboweni would usually explain. It's a problem. So you are a standalone, you do a phenomenal job for a government that will waste what you are doing. It's a frustration. So how do we begin to bring all three of you here in one stage and direct a proper question to this person in relation to what Khanyago has done and what the Treasury is doing? We need to have that conversation, because I tell you now, the job you have done is good, but we don't even know about it. It's wasted somewhere. So I'm beginning to say maybe we need to revisit how we do this thing.
Okay, thank you so much. Did we get your name? Yes, Mpati. Thank you so much. I think there were just 3 more people that we wanted to address, yes?
Okay, hello, my name is Tabo. I am one of the business people here in the township. I run an IT electronics company, and mine is more of a comment, especially from what Mr. Naidu have said around education, because you see, this fourth industrial thing, it's serious. It's very, very serious. But also I want to share the sentiments that I'm put. Or you see, we need to have these conversations, but the problem is, when our leaders and governments come to us in the township, they coming to tell us what needs to be done. They don't understand what we need. They coming to do a presentation to us. We are not part of the plan. And that becomes a problem. You know, it hurt my heart today because as a small business as I am, I'm trying to assist a primary school building a computer room, which the government did install that computer room with towers that are running from a mainframe, which are very old. That computer room is in there for 5 years. These kids, they've never used it. All the towers have blown up. They've never switched on their thing, but every day when they walk into the classrooms, when they switch on the lights, the computers are on, but they've never used them. Now, I wanted to assist them, but I don't know where to start and what to do. That's a challenge you have. Now, we're moving already into this fourth industrial and 20th revolution. Now, what is the point of that when a 6, 7, 8, 9-year-old in the township doesn't know where's the on and off button of a computer machine? Thank you.
Thank you, Thabo. 2 last short questions or comments.
Good evening. I am Sipo Hlongwa. I think you were referring to me when you said Sipo. I am from the Township Economic Empowerment Group, and am also a CEO of the South African Labour Law Corporation. I am gravely concerned about how the increase of salaries is portrayed as the driver of inflation. Now, I want to us to go 25 years back. We all know that during apartheid, black people were earning less than whites purely because of the color of their skin. And we also know that positions of management belong to white. And the gap between those that were at the bottom and those that were at the top were very, very wide. Fast forward to 25 years later, what was supposed to have happened was a salary adjustment, but that never happened. Salaries were just fought on an increased basis. And now, when there is a rise and attention is drawn to salary adjustments, in fairness of the very same people that were earning far below than what they were worth, then salaries are becoming now a driver of inflation. Be it, notwithstanding that, if you take the amount that you pay managers, in most cases, it's by far much more than those salaries of the workers put together. So this distortion of facts creates an inflation that when you raise a banner and you say, I want a minimum wage of this much, you are killing the economy. However, when a CEO earns 20 million, 15 million, no one raises a finger, no one says a word. So as a Reserve Bank, I would like to know if you can give us a comment as to, is it true that the driver of inflation is salary increase, or is it a misinformation so that black people can be kept? Thank you very much.
Good evening. I'm Fungwa Sandenko from Crestad. My first question is in relation with the growth. You said that the reason for poor growth is uncertainty in the investment. So what I wanted to know is that what role does the Reserve Bank play in order to reduce uncertainty so that we can get more investment and the economy grows? Then the second question is about cryptocurrency. What I wanted to know is that does the government, the Reserve Bank, play any role in the adoption and regulation of cryptocurrency in South Africa? Then the last question is about nationalization of the Reserve Bank. Is it an advantage to the economy? And if so, is it going to affect the independence of the Reserve Bank? Thank you.
Thank you.
Rashad, can you deal with wages and inflation, please? Yeah. And you can deal with the rest.
Yeah. I think that your comments were really important and really spot on. I think it would be totally misleading if we are portraying the need to redress the historical backlog of salaries and so on as not in the interest of monetary policy and so on. So I think that I want to kind of separate two things. The first is that when we say that wages put pressure on inflation, we're talking of the collective wages of managers, of workers, all in all. So, and when we think that wages are a driver of inflation, we're simply making an observation that you may be a small firm, and to a large part of the problem is that when you experience as an owner of a small firm wage increases, that makes it difficult for you to contain your prices, and you push those prices up. So I think that when we talk, and we do it in this document, we talk in our document, we say that wages are a driver of inflation. They are a driver of inflation, but it's not the same thing as saying, how do you deal with inequalities in the system? If people were unfairly being paid in the past, and that has to be redressed, firms must, in a competitive society, firms adjust their profit margin. So, if wages go up and the profit margin goes down, that means you can still contain inflation. But I do want to emphasize, we cannot get away from the fact that a number of things drive inflation, of which one is wages. And the fact of the matter is that if I'm competing, if I'm costing my company 200,000 a year, and my productivity is average, and my competitor in other countries costing the company 200,000 a year, and her productivity is much better, and I ask for more wage increases, that is a pressure. So I think that we are concerned with wages, but we're concerned with wages purely from what effect it has on inflation, and it's not a statement about the need to recognize that there's inequality in society, and those have to be redressed. I'll kind of be very clear about that.
Sure. Chris, is there something outstanding that you want to deal with? No, okay.
So I deal with the uncertainty around investment.
And the mandate.
And the mandate, okay. Let me start on the uncertainty around investment, and then I'll deal with the mandate next. I think the Reserve Bank can play a role in ensuring uncertainty is lower. The best way that we can do that is through achieving our objective of price stability. If you are reasonably sure that over the next 10 years, prices will increase by 3, 4, 5%, right? You are much more likely to make an investment decision. If you are reasonably sure that interest rates are not going to go sky high in the next 10 years, you are much more likely to make an investment. Right? That is the best certainty that we can provide. I remember I started working at the Treasury, and about a year later, 1998, the interest rates went up to 25%. I just bought a car, and I was eating baked beans and toast and 2-minute noodles halfway through the month. I'm serious, right? Because when I bought the car, the interest rate was 14%. A few months later, the interest rate was 25%. Right? That kind of uncertainty kills a business. Right? That kind of uncertainty kills an economy. If we do our job properly, we should have much more stability in the rate at which prices go up and the rate at which interest rates change. Interest rates will change. They'll go up, they'll go down. But if we do our job properly, we will not get the kind of massive increases in interest rates that we saw during the 1998 Asian financial crisis or in 2001. Right? So that's, I think, the best way we can provide certainty. There's little role that we can provide certainty on the government side. I think it's up to you to hold government accountable to provide certainty on those issues. Let me deal with the mandate of the SARB. And I'm going to spend a few minutes, Governor. There are 3 distinct debates going on. The first is the ownership of the Reserve Bank. The second is the independence of the Reserve Bank. And the third is the mandate of the Reserve Bank. The ownership of the Reserve Bank does have private shareholders. It's a historical legacy from 1921. These private shareholders play no role in monetary policy, no role in financial sector policy, no role in regulation. There's a board of the SARB that's a governance board. It's making sure that Lesecha and I don't fly first class and don't steal any money. It actually plays a fairly good role. Make sure that we don't give contracts to our friends. It's a governance board. It plays no role in policy. The 15 members of that board, 8 are appointed by government, 7 are elected by these private shareholders. The private shareholders get a maximum of 10 cents per share in dividends. There are 2 million shares in issuance, so this year we gave 200,000 rand in dividends. This year we made 6 billion rand profit. 200,000 rand is 0.000001%. Government, either directly or indirectly, gets the rest. Right? So we can get rid of these shareholders. It will change nothing. However, it introduces 2 risks if we get rid of these shareholders. The first risk is a financial risk, because you have to compensate them. You can't do expropriation without compensation in this regard. There are bilateral investment treaties, there's international law, there's local law. You have to pay them what a court has to decide is just and fair compensation. These shareholders, some shareholders, want a share of the SARB's balance sheet. Our balance sheet is now about $50 billion. Right? Most of which is the country's foreign exchange and gold reserves, which we view belongs to the country, not to the SARB. It belongs to South Africans. They want a share of this. So when you nationalize the SARB, they bought these shares for 2 or 3 rand. They want tens of billions in compensation. Right? So let's assume that we decide we cut a deal with you, we give you 100 million, you go away. And one shareholder takes us to court and says, no, in terms of the bilateral investment treaties, in terms of the law, I want X% of the SARB. I don't know what the court will decide. But do you want to put the country at risk? Right? So that's the financial risk. The second risk is a legal risk. To get rid of the shareholders, you'd have to amend the SARB Act. You have to go to Parliament, you have to amend the SARB Act. Right? When you go into Parliament, you can have one set of proposals. What comes out of Parliament, you've got no control over. There are 400 MPs there. Everybody wants to put their 2 cents worth in. In that case, you do risk undermining the independence of the central bank. You do risk, the legal risk, that the mandate of the central bank and the independence of the central bank may become circumscribed. So even if that doesn't happen, for 200,000 rand a year and no policy influence over policy, we are of the view that it is not worth the risks. So that's on the ownership. Independence of a central bank is absolutely important in our architecture of our country. Government has fiscal policy. Fiscal policy is made by elected politicians. They decide how much to spend, how much to tax, how much to borrow, and it is right that a democratic government makes those decisions. Right? We then say monetary policy, which in some ways is a check, not on government, but on we as citizens, how much we borrow from tomorrow. We give that job to an independent institution. If you don't give that job to an independent institution, we will blow tomorrow and our grandchildren's savings manja. Right? So there was sense in the architecture of the Constitution that says fiscal policy is given to democratically elected officials, monetary policy, which plays a role in macroeconomic stabilization, we give to an independent institution. Our view is that independence is absolutely critical to a sustainable economy. There are very, very few places where where independent central banks are compromised and you've got sustainable growth. Now let's deal with the mandate. There's 2 parts of the mandate. The first part of the mandate is in the Constitution. The Constitution says that the mandate of the Reserve Bank is price stability in the interests of balanced and sustainable growth. The precise formulation of the inflation target, the framework around inflation targeting, do you target inflation, do you target the interest rate, do you target something else, is decided by government in consultation with the central bank. Right? So government decides on the mandate in consultation with the central bank. The Minister of Finance has to say, I think the monetary policy framework is X, Y, Z, and the central bank governor has to concur. Government can change the mandate. Within the constraints of the Constitution, they can change the mandate. It is within their power. Right? Our view, there's been proposals around whether growth and employment should be added formally to the mandate of the SARB. Whether you add it formally or not, it should make no difference to how we act, because we take account of growth and employment. We take account of growth and employment at every single MPC meeting. Absolutely everything we do has to concern ourselves with sustainable growth and employment. We do have the ability to influence growth and employment over the short term, but not over the long term. The reasons why our growth is low is not because of the central bank. The reasons why our unemployment rate is low is got little to do with the central bank. Those are structural problems that the country must fix. In fact, in our view, the central bank is one of the parts of the architecture that's working. Right? We're playing our role. But I think it's now up to, as a country, getting all of those other things in place so that we can grow faster.
Good.
Sorry for being so long.
No, that is good because you have put it better than I would have put it. So I have to deal with the issue of the cryptocurrency, but as I deal with it, I just wanted to give 2 examples and says that The German Bundesbank is government-owned and it's very independent. The Central Bank of Turkey has got private shareholders and is not known for its independence. So it was important to distinguish those two. The governor just got fired by decree over the weekend, and his predecessor got fired in the same way. So these things happen, and so we have got checks and balances in our system. Cryptos. People call them cryptocurrencies. They're not. They're not a currency. They might be crypto assets. Because a currency must meet the following 3 criteria. 1, it must be generally accepted as a medium of exchange. Generally. Unless you know some Bitcoin or something and you are in that group, you will not participate in the thing. Can't use it for payment. Secondly, it must be a store of value. And I think that this thing could be a store of value. Some people look at it and say that they've got so many Bitcoins. Can measure that. I mean, I guess I could have used cows and said I have got a herd of 100 cows and that's my store of value. Can always price them. Thirdly, it must be a unit of account. And this thing is not a unit of account. We know that. And so our attitude to these things is it's not something that we would say we would ban. We would not do that. But we had to engage with certain things. And what we had to engage with was the technology that underpins these crypto things, cryptography and blockchain technology. And the technology itself can be useful in many other things. We have tested it in our payment system space, and it can work for payment systems. And it has also turned out that it could work in managing huge service delivery issues for government as a technology. That is where it ends. People trade in these things. They're not even sure who is it. I can tell you now, if you have a problem with the rent and the value of the rent collapses, you know who to scream at. Okay? When the value of Bitcoins collapses, who do you scream at? Now, we do not even know the person who came up with this thing, whether it's he, she, or it. Right? But people trade these things, and in spite of us warning people that, look here, we're not sure about the security of these things, people still run there. Okay? Is this in the same way that we warn people, don't put money in a Ponzi scheme, rather put it in a stokvel or in a bank, and people still go and put it in a Ponzi scheme. And the way it goes in these Ponzi schemes, okay, I should not have used Ponzi schemes. I think we used to call it push-push in township. Yeah, push-push. So the way with the push-push is that the one who is at the front and you guys coming at the back and you are pushing, the one at the front is the one that gets the most benefit. And all of you at the back suddenly realize, wait, there is no one pushing me at the back. And then you try to get out, and by the time you try to get out, the guy at the top had taken his money and is gone. And that is the risk that you face. But in spite of us warning people, people still get in there and hope that there might still be a few people pushing me and I might be able to get out, and then it would be the problem of the one behind me who are still pushing. So just be wise out there about push-push. There have been a lot of comments which we will take on board, which have been very, very helpful, and thanks for that. And the organized formations in Soweto, yes, if you organize something, we will come to you. It doesn't have to wait for this MPF, because the next time we come for the MPF will probably be in October or something like that. Yeah, yeah. Don't wait for October. Don't wait for October. Just arrange something. We will come and we will engage with you. We might not be all 5, but you can rest assured one of us will be there at least in that meeting for engagement. And thank you very much for that. I hand you over back to Kokeso, and she will take you from there.
Thank you, Governor. Thank you. I'm actually sad the governor said not all 5. He didn't say all 6. Maybe I could squeeze my way in some way. I think you guys can agree with me in thanking the MPC panel for really just being able to transfer their knowledge in a very effective manner. I personally have learned a lot from them. And they allow you to build the debate in your mind, right? And expand on the topic, because they are the great giants on their shoulders which we stand, right? So, Aus Kulufelo had a comment that, or was worried, that she would have to chase some of the MPC members to get some of her answers. But fortunately, Aus Kulufelo, you will not have to chase very far. We will be having some food with the MPC members right outside. So kindly keep tweeting, and remember to fill in your feedback form, hand it over at the registration. And please, after your food, have a safe travel, and we are very glad to have you, and we thank you for your comments and your questions, and we look forward to seeing you later on in October. Thank you so much.